I don't have a credit card.
What? Okay, that's the weirdest thing I've ever heard. And I tried not to have a judgy face, but I can't help it. We gotta fix it right now, today. Wow. Okay, I'm probably gonna regret it, but why?
Okay, well, I've never felt like I needed to get a credit card. I guess I feel like my debit card is sufficient for my lifestyle, and I've never felt like I need to get a credit card. But I've heard there are several advantages to having a credit card, and that's what we're going to talk about today.
Yes, start watching. We're gonna try to fix this issue right now and quickly before anybody else knows. I'm gonna start with talking about the advantages of credit card. The first advantage is, of course, the obvious one, it's convenience. But as you mentioned, you have a debit card, which serves that purpose perfectly fine. I agree. But where a credit card comes in handy is that one, you have protection on those purchases in a sense, like when you purchase something online, especially, and it's fraud, you can claim it through your credit card and make sure that you can stop that payment to go through before they actually do it, because they I think there's a timeline between, and that's why with credit card you can report it and you could get your money back. With debit card, it's, from what I know, you can't do it. And if you can, even, it's a lot harder because the transaction just, goes right away from your debit to that transaction. With credit card, it doesn't work that way. So it's easier to get your money back and to report an issue. So that's one. And then two, also through a credit card, you also get, all that insight into your expenses. And they give you, all the data as to, an easy way, in a very user-friendly way, where you could see where your money goes most of the time, which could be very useful. Like if you spend a lot on, eating out, you would see in the food section that it's your biggest expense, and so forth. Another, I think the most important part for me is the cashback and the reward points, which with debit card, obviously you don't get it. But with debit card, you actually pay more than you would have if you use a credit card. And here's what I mean by that. So when you purchase, when the specific credit card gives you reward or cashback points, on the other side of the transaction, the business is paying to be part of that. Especially like for American Express, for example, they have like businesses who would give you, for a month, they give you, 10% back, which is great. But then on the other side of the transaction, the business is paying for that, which means they're adjusting their prices to reflect that expense. You see what I mean? So because they pay for credit card charges, they pay for the, to be in that rewards program, because that's another way to promote your business, to be in a list of, reward system. Okay. And yeah, like American Express is not eating that cost, it's the business that is eating that cost. Okay. So when you pay by debit card and don't get that cash back, that means you're paying higher for something than you would have if you used a credit card. Does that make sense? I feel like that was so
I think so.
Explanation.
So you're saying that a credit card has certain rewards and perks, right?
Yes.
And so depending on which businesses are reflected in those, if you are purchasing from one of those businesses with a credit card, you're getting that reward from it, which compared to using a debit card where you don't get any reward or cash back, you're paying more because of that by using a debit card.
Yes. So for the businesses to be in the rewards program, that was just one of the examples. Like that's one way. But the other way is, and that is very specific to like American Express. Like you'd see, businesses, buy I don't know, spend $50 in this business and get 10% back, for example, then like those, I mean that, you know, the price is reflected because it's a business marketing expense, or however they want to categorize it. But there are cases where like grocery, you know, it's a big category that you get, for example, 5 or 6% back on groceries. Because you're using credit card, there are transaction fees, and the credit cards are making money that way, and you know they want to drive more customers to pay for credit cards. But businesses know that you know the majority of people are paying by credit card, so those expenses, because you don't pay credit card fees everywhere. There are only certain small businesses or certain services that would want you to pay for the credit card charge, because it's usually, I think, 2.5 to 3%.
Okay.
That is the charge per transaction, and that's how the credit card companies make money. Well, one of their income source, and the business is basically eating up all those transaction fees for the credit card.
Okay.
Okay, so they reflect that in their price. That's as an expense. So they're not going to eat it up. They're going to pass it on to the customer.
Okay, so let me see if I have this right.
Okay.
So a business will set the price of a product to reflect, like, covering that credit card fee.
Yes.
And so if you're paying it with a credit card,
You're going to get that money back. You know,
Why do
through
you
cash
get it?
rewards. Like through cash rewards, not all of it, but
Okay.
you're gonna get it, like, you know, through cash rewards. There are certain percentages.
And so then if you're paying with a debit card, you're basically
Paying
it, but for no reward.
No.
Okay. Wow.
Yeah, I think that's one of the strongest reason that like you need to get a credit card when you're purchasing in the U.S.
Okay.
Another good reason to have a credit card is to build a credit history. And this is important because, I mean, at some point in your life, you're going to make big purchases like, you know, car or a house, or it could be something else like this buy now, pay later program. So like if you don't have that good of a history, then with buy now, pay later, you might not be eligible to receive it like interest free for like 6 or 12 months or however many they give. So it's good. So it's good to have because it's the easiest to get into. There are credit cards that, you know, don't require much history to start with, and there are different ways to get around that, you know, to start building history. And credit card is the easiest. And if you don't get approved for that, there's another way, you know, to build up your credit. And then, you know, and then from there you start with credit cards. But there are drawbacks to credit cards, and you know they are the reason that people are spending more than they make because you're not transferring physical money. It doesn't feel or seem real to you until you get the bill. But even then, like I personally, for example, have like an auto payment, and you don't feel that transaction going on. Like you don't feel, because the more you spend, you know, physically by money, the more you're cautious about your spending because you feel your, you know, your money going away. You don't like that, you know, your hard-earned money. But with credit cards, you can get, it could be very easy to spend more than you make. And I know I had that issue where like I was always very frugal and very conscious about my spending before US. But once I moved here and then, you know, started using credit cards, there was a time period when I kind of went on a buying spree because there was no that kind of pain of losing my money because I didn't see it. It just went through.
Because it's like, oh, you'll pay that later.
Yes, exactly. So you get to that, and then I was like, wait a minute, where's my money? You know, like, and then I started going through. Okay, I spent on this, on that, and then you realize that no, you are spending a lot more than one you intend to, and two you realize, which is a very dangerous territory to be in, because you can like slip away, and like anybody, you can be frugal, and then once you're, you know, introduced to credit cards, like for me, that was the way I always thought of myself. Like I'm very good with money. You know, even as a kid, you know, the pocket money that was given to me, I saved a big portion of it, for something better, like, I could buy, for myself something, not, spend on the small stuff, but something that I would want. And then I get introduced to credit cards, and that goes down the drain, or yeah. So it's very easy to get into that rabbit hole, maybe. I don't know if that's the right expression, but it's very easy to kind of, get away with, not get away.
Carried away.
Yeah. That was, it's very easy to get carried away with your expenses and just not pay attention. But just to not go two sideways, but just a little tip here, what I find very useful is I go through my expenses and with an Excel sheet, and I literally put all my expenses there. That way I see what I'm spending on, which I mean, I know there are apps and the credit card companies provide that too, but I feel like until you type it in, you feel it. Once you do it with hands, it's irreplaceable. Those charts, they're great, they're easy, but easy is what hurts you because it doesn't register as good as if you type it. It takes my time, but I feel like it's worth it because it saves me money down the line. That I feel my expenses, I feel my money spending on something I could live with that, right? So I think that helped me a lot, and I think that's something you could use.
Yeah, no, that makes sense.
So and then another thing I want to point out not to use credit card for is for the loan. Like in a sense, you have a line of credit, and technically you could tap on it. Whenever you want to. Like if your credit card is $7,000, you can literally make a $7,000 worth of purchase. But you don't want to do that unless you can, cover it up within that month period that usually that credit card payments are supposed to be. Because if you paid within a month, it's great. You get good points and you're off the hook. But it could easily get a habit. So I would not suggest doing it because the interest rate on credit card loans are one of the highest. They're really bad. They're like 24 to 27. I feel like I've seen too annually, and that's on your balance, and that adds up. And when you start, when that interest starts, because you have an outstanding balance, it's so hard to get out of. So it's just don't, just don't even think about it. So I would not suggest using credit card for that. There are so many personal loans options which are way lower than a credit card interest rate. So I think that's the worst possible way that you could use credit card. So it's again it's a tool that you could either take advantage of or it's going to take advantage of you. So you better be very careful that you are the one who's taking advantage rather than you're being taken advantage of. I think another thing I want to point out, because it's another easy one to to forget and just miss out on, and it could hurt you a lot financially and credit history wise, is that a lot of credit cards, when you sign up, they would there's so many good promotional stuff that they offer, and one of that is no interest for a year, right? So you can as long as you pay the minimum, which usually is low, it could be depending on your balance, because it goes I think 35, or I think I've seen even 15 too as a minimum charge. And then if your balance goes up to a certain point, that the 10% of your balance is higher than the $35, then they'll charge the 10%. But again, it's different depending on the credit card, so you need to read into that credit card what the terms are. But then once a year passes and you don't pay the full balance on time, it's gonna really mess up your financial history and your credit card history as well. So all those 25% annually will kick in, and I think in addition to that interest rate, there are also late fee charges. So it could get so messy. But this is not to to try to, you know, scare you away from credit card. It's all the precaution that I feel like you need to think of before getting into credit card, and making sure that you're very disciplined about it, that paying it every month, and the credit cards have different dates. Like, you know, it could be 25th, for example, from 25th to 25th, or it could be, I had one that was really annoying, which was from 8th to 8th. Like, who does that? I'm used to that being, you know, at the end of the month.
Right.
But it was 8th to 8th, and I think I set up auto charges to not forget about it, because it was, and I think I did forget once or twice. I forgot to pay out my balance. And I received late fees for that, and I think a little interest, but my balance was not big enough to like, you know, to mess it up, because I tried to keep everything very low. And you also, to my point, you need to keep the utilization rate also low, because if you keep it high, like say for example you have 2 cards, and on one you have a line of credit of $2,000, and on the other you have a line of credit of $1,000. So the way the reports will look at it is that you have $3,000 line of credit in total, and you need to spend, you know, the cumulative of the 2 credit cards, you need to spend less than 10% to like keep your credit card history good.
Wait a second.
Yes.
Okay. So you're saying that, so you have a limit your line of credit, and to have a good credit history you want to spend less than 10% or less of that amount each month?
Yes.
Why?
Well, it doesn't matter each month, but to your point, like they do report it, I think once a month, if I'm not mistaken. They report it once a month, so which means, yeah, you should have it less than 10%. Because it's called utilization ratio or rate, one of those two.
Okay.
But the point is that from your total line of credit that is available to you, you're not using most of it. So you need to keep it low, because basically the idea is you're using less than you can. So
why? I don't understand.
it's part of the, well,
Like,
the more you use it, the more risky you're considered.
Okay.
Because the more you use it, then the less likely you're gonna pay it off.
Okay.
Because
But what if you like build up, you're consistently paying it off?
I mean, it's okay, but then there are like, I think there is like this, if you get, so there are several, I think we're sidelining towards how credit report works, but just to answer your question, there are a few factors that affect your credit score, and paying consistently is one of them, and I think it's the biggest one. Okay. And then utilization is just another one. Okay. So that's like another boost to your score.
Interesting.
And it does help. Like I've noticed when my credit card balance would go up, but you know my payment history is good. It wouldn't like move much.
Okay. So basically, if you had your overall total of lines of credit add up to $3,000,
right,
then is this for each month? You shouldn't, like, to have a good history, you shouldn't spend more than $300 each month?
Pretty much. I mean, you can spend, but once you like paid out before your report goes to the credit card, like to, I think Equifax is one of those, and to all those agencies, like if you paid out before that, I think you should be fine.
Oh, so you're like your balance shouldn't be more than 10%.
Yeah.
Is that what you're saying?
Yeah. Okay. Yeah. The balance shouldn't be more than 10%.
Gotcha. Okay, that makes sense. I was like, why are they giving you this line of credit, but you should only use 10% of it?
Good question. Like that's a good question, but I feel like that's those kind of that report, like it evolves depending on like historic behavior of people using credit card. Like if you because like the way I think it works is like based on all those years that people have been using credit card, and then they gather those and they see a default rate, and then there are different triggers that are early signs of someone defaulting on a credit card loan. And then based on that data, they create those rules that, because probably there are a lot of people that used too much of their credit and then they default on that, like say 50% of whatever it is available to them, and then it keeps growing because of the interest charge, and they never paid out and they default. So based on that data, because there are a lot of default cases used for big balance, then you create that rule that you need to use lower and then to increase your score.
Okay.
All right, now what we're gonna do is we're gonna look through different credit cards that are beginner friendly for Alex to choose from. And before we move forward to the options, why don't we talk about what are your main expenses, because that does affect which credit card you would want to choose.
Okay. I feel like I don't have a lot of expenses, but probably like food and gas.
Good. Okay.
Yeah.
All right, so we have several options to choose from. Discover is one of, I think, the best for beginners. It has very good approval odds, and it's good kind of to start building a credit. This one has like 5% cash back, but it changes through quarters. Like for 3 months you'll have, like recently they had, for 3 months they would have 5% on digital purchases, like whenever you use your Apple wallet, it would give you 5% back, which is really good. And sometimes it will have, for example, 5% on groceries, which could benefit you too. Another one to think about is secured credit card. The way they would work is that pay in advance, like you put $500 and that's your limit. So that way, the credit card company is not risking much, and you are building your history, and you're also like earning cash back at the same time. So secured credit card is a good option, but for some, like, you might get approved for this. So I would suggest doing this only if you get rejected the cashback. The thing I like to do is get different credit cards that are good for different categories, and then utilize few to get the maximum. Let's go to the American Express. Blue Cash every day, most basic. I used to have it. I changed to a different one that we could talk about, although that's not a super beginner. But Blue Cash every day is also great. You have 3% cash back at supermarkets, and with a limit of 6,000 on purchases, not on the cashback. So 3% on US online retail, and 3% at gas stations. But the problem with American Express, the same for Discover card too, which I should have mentioned, but they're not accepted everywhere because Visa and MasterCard are the most popular ones. But American Express and Discover are neither of those. They're their own separate, and I know for American Express the reason mainly is that it has a higher interest rate charge, which mostly goes to the businesses that use them, and I think I've heard that's one of the reasons that it's not available everywhere. But I don't know, maybe the infrastructure for some services just don't have that enabled. I'm not sure, but I know that sometimes using your credit card will be just not possible with American Express and Discover. So that's something to note. And that's something that I think that should not be the reason to not have these two credit cards, just because they have great service, they have good cashback rewards, but just to have an alternative with another card that is either MasterCard or Visa. But yeah, with this you earn a statement credit card after you spend $2,000, which I know some people just spend $2,000 just to get $100 back, but like I don't think that's the way to go about it. But the way I do is, like, if you have a big purchase that you want to make, just make it like after after you get the credit card, or within the 6 months that it mentions, to get the $100 back, but don't spend just because of the $100.
Yeah.
Just to have a credit card where the Amex and Discover are not accepted, I suggest to use Capital One, which is also pretty good credit card with good support. And then you could, go to the no annual fee, just personal card type. And if you don't get, again, like the same logic here, if you don't get approved for one, you could use the secured version that they also have. And you can, the Quicksilver secured reward sounds pretty good with no annual fee, and it gives you 1.5% cash back. So I think we're done with our options.
Yeah, I think I have a few to choose from. I'm leaning towards the Discover card.
Cool.
But I think I will probably do my own research a little bit and like really nail down what I think is best for me.
Good. Yeah, it all depends on your expenses and where you want them.
Right.
Where you'll get the maximum reward for them.
Yes.
All right, this concludes today's video. Thank you so much for watching. We'll hope to see you next time for the video where Alice will show you how to open a credit card. Once she nails down, she says, to the credit card that she feels will give her the best rewards and best terms, she'll show you how to open it. So make sure to hit the subscribe and notification button to not miss out on that.
Yes.
Bye.
See you next time.
Bye.
You better be there. Okay.
Cut that. That didn't make sense. I'm listening.
Toma just coughed.
Toma!
I don't have a credit card.